Hey everyone, Bill Barhydt here. Welcome to the Abra Money 3.0 show where I talk about the future of money and technology. This episode is an edited audio version of a recently recorded Money Talks Live AMA. There's also a video version of this podcast available on youtube.com/Abra Global. Again, that's youtube.com/Abra Global. The information presented in this podcast is provided for informational purposes only and should not be used or construed as an offer to sell or a solicitation of an offer to buy any of the financial assets discussed. Neither Abra nor any of the participants in this podcast make any representation as to the suitability or appropriateness of these financial assets for individual investors. Investors must make their own determination, either alone or in consultation with their own financial advisors, as to the suitability or appropriateness of such investments. Abra interest accounts are issued by Prime Trust and Nevada Chartered Trust Company. Rates for Abra interest accounts are subject to change. Digital currencies are not legal tender, are not backed by any government, and Abra interest accounts are not subject to FDIC or SIPC insurance protections. So first thing I want to let you know is we have raised our interest rates on the Abra interest account yet again. So we're pleased to announce that we just raised interest rates for Bitcoin and Ethereum to 4.5%, and we've kept our phenomenal dollar rate steady at 10%. And as always, the dollar rate includes all the major supported stablecoins. And you can continue to deposit funds via bank wire, ACH, cash at retail were supported, and of course via external crypto wallets. If you want to transfer a different crypto, for example, and then transfer or exchange that transfer to a stablecoin or Bitcoin or Ethereum, of course, our trading app allows you to easily do that. Okay, and in this week's newsletter has a really cool video that we've been including as to how that all works. All right, so as some of you may know, I've been on a little rant the last few days about what's going on in traditional banking, and also some encouraging news that I've seen vis-a-vis some crypto banking opportunities. But for as long as Bitcoin has existed, many banks have simply blocked their users' ability to directly transact in crypto by not allowing customers to send money to exchanges or services like Abra. And if you've been a crypto user or holder for any more than 3 years, I'm sure you've experienced some banking-related issue. Some banks have clearly acknowledged that customers are perfectly within their rights to purchase crypto via their bank account, but it's ridiculous that we're still having this discussion in 2020, but here we are. So just this past week, one of our awesome investors from Blockchain Capital, Brad, was doing a large bank wire into his Abra app to earn 10% on his US dollars when he was informed by his bank UBS that his account was being investigated for transacting with a crypto company. He then informed Abra that because of this investigation, he's closing his bank account, moving to a different bank, and he's going to be sending even more money to Abra. So take that, UBS. So my advice to all of you who support crypto is to simply close your accounts at crypto unfriendly banks immediately. That's what I personally have done and will continue to do. It's time to start calling out these bad actors for their behavior. According to Moon Banking, a website that tracks the crypto friendliness of US banks, the worst actors are Chase, UBS, Capital One, Wells Fargo, Citi, Deutsche Bank, and there are many others. This bad actor designation doesn't necessarily mean that these banks block all crypto transactions, but how many do they have to block before they should be considered a bad actor? Most block credit cards but support debit card transactions. I kind of get that because they are taking some fraud risk. But some will close your account for doing just a bank wire, which has no risk. A bank wire has minimal to zero risk to a bank. But some will close your account or investigate you for doing a large bank wire. That's crazy. If you support crypto as the future of banking as I do, then that is enough to warrant moving to a different bank. But where do you go? Well, fortunately, they've also outlined a few of their good actors, meaning companies that have been either strongly supporting or reasonably supporting crypto as a simply allowed, reasonable usage of your own bank funds. Not that that should matter to a bank. Ally, Bank of the West, Fidelity, BBVA Compass, Schwab, USAA, Bank Simple, Navy, A+. These are all excellent examples of places where you can go open up an account, and not have to worry about your crypto activities, which you shouldn't have to worry about in the first place. Okay, but ultimately, what we need are crypto-centric banks. So now I realize this is a United States centric issue, but in the US, Wyoming has been leading the charge in creating a crypto-friendly banking environment. Now, I apologize to my friends from Wyoming that are watching, but let me take a step back. And so many of you from outside the US may be saying, what is Wyoming? I've never heard of Wyoming. Wyoming is a huge landmass US state with a relatively small population that has been very aggressive in creating new legislation to allow for crypto-friendly banks in the state. And so to that end, two banks have announced that they have been given either licenses or provisional licenses in the state, one being an existing crypto exchange and another being an entirely new bank being formed. I am definitely going to be supporting these banks, and I think it's awesome what the government in Wyoming is doing to try to lead the charge here. Okay, so the second thing that's come up in the last few days, and I had another kind of online exchange with somebody that I actually really respect, Jimmy Song, who's been a fantastic evangelist to the Bitcoin community over the years. He is what I would call a Bitcoin maximalist. What is a Bitcoin maximalist? Well, a Bitcoin maximalist is somebody who feels kind of almost a moral obligation, if you will, to basically make it clear that in their opinion, Bitcoin is the one crypto that will rule them all. As a matter of fact, the word cryptocurrency shouldn't even exist because all we need to worry about is Bitcoin. And that all altcoins are basically not worth their weight in ones and zeros and will simply disappear at some point and be worthless. Now, I strongly disagree with this perspective, not because I'm financially incentivized to do so. I simply hold more Bitcoin than I do or any other altcoin for that matter. But I still disagree with this perspective. Why do I disagree with this perspective? Well, it really comes down to one thing. In my mind, it's technology competition, which will ultimately make Bitcoin even stronger. Now, as digital gold, right, which is where Bitcoin has gone, by the way, the maximalists also believe that we have evolved past the original vision outlined in Satoshi's white paper. I don't have a problem with any of that, right? Whether I agree or not also doesn't matter. Bitcoin is consensus driven, and the consensus seems to be that this is what the majority want. That's totally fine. Bitcoin, and that consensus is that Bitcoin has evolved past the original Satoshi vision such that Bitcoin itself on-chain does not necessarily easily support small peer-to-peer money transfers, which is fine. Others want that to go kind of off-chain to technologies like Lightning. And again, I have no problem with that. But it is incumbent on all of us to not assume anything, right? And look at this from every perspective, right? Why might that perspective be wrong? Why might other alternatives be correct? How can Bitcoin be improved in the future? How can Bitcoin be improved in a way that is not so risky? We don't want to take big technology risks. We really don't want to take many technology risks with Bitcoin now that it's worth 200 billion. Okay, and so this is where altcoins come in. Altcoins play effectively two roles as it relates to technology, in my humble opinion. One, they showcase new technologies that Bitcoin is unlikely to adopt very quickly because Bitcoin doesn't adopt anything very quickly. And again, I would posit that that's a feature of Bitcoin, the fact that it's technologically reliable because they don't push the envelope on doing things too quickly. Great. Lots of altcoins do that. Even Litecoin, for example, which I'm a big fan of, even if you look at Litecoin as a test bed for Bitcoin, that's worth something, okay? And so I use it on occasion for small dollar transfers, but I also love that the team there is willing to push the envelope and adopt technologies like they adopted SegWit faster than Bitcoin did. They adopted a bunch of technologies that are coming out in, this is not a tech show, so I won't get too deep into the technology unless people ask me to in the questions. but they are adopting other technology that we're going to be seeing in Bitcoin in the coming months and years already. And that's fantastic, right? Because it says if it doesn't work, I would rather have it not work in Litecoin, honestly, no offense to Litecoin, than have it not work in Bitcoin, right? And that's what altcoins are also doing for us. The second thing that this technology adoption is doing for us is it's showcasing potential different use cases of crypto, right? One of those use cases, which we're going to talk about today, is smart contracts, but specifically as they relate to what I call non-fungible tokens, or NFTs, or what I don't call them that, everybody calls them that, NFTs, non-fungible tokens. Most of you know those as collectibles or gaming assets. We'll come back to that. But that's a use case that Bitcoin can't easily do. It can with a little bit of technology trickery, but it's not optimized for that. Technologies like Ethereum, software products like Ethereum, are more optimized for that. Okay, so again, these are a couple of reasons why I think that altcoins and Bitcoin will ultimately coexist. So ultimately, nobody knows what's going to happen when it comes to crypto. But I would be shocked if we didn't evolve to an ecosystem in crypto where dozens of cryptocurrencies coexisted to solve all sorts of different problems. Bitcoin will likely remain the stable king and best example of decentralization, and that's great. I've got a huge bet that that's true personally. Other projects will address different needs and take technology risks that Bitcoin either can't or are irrelevant because it's not what Bitcoin was even meant to do, such as DeFi. Okay, so as I said, let's segue that into DeFi. So as I said last week, I think ultimately DeFi may win, but I believe that in the next 3 years at least, CeFi services like Abra will continue to rule. There are simply too many things that can and will go wrong with DeFi at any kind of large scale. But this kind of broad-based test, let's call what's happening a huge test, that we're seeing in this new DeFi world is fascinating. It is opening up an entirely new world of possibilities, and I'm really excited about it. Right? Now, if you're willing to put your own money to work as part of this global test, please tread carefully, right? You could lose a lot of money. You can make a lot of money, no doubt, but you can also lose a lot of money very, very quickly. Case in point, right? The rage in DeFi investing that we saw in August has cooled dramatically in September, with the token space down. Now, this is as of yesterday, about 40% in September as a whole, according to this DeFi index, which is tracked by one of the large exchanges out there. So, but of course, the big story of the past couple of weeks has been Uni, the native token of Uniswap, which after hitting a record high is really cooled off and then bounced back a little bit. But again, tread carefully. I'm testing it. A lot of my friends are testing it out there. We're fascinated by it. It's very early. And as I've made the point before, even Vitalik, kind of the benevolent dictator behind Ethereum, I know he wouldn't describe himself that way, has made the case that there are a lot of inherent risks with DeFi right now. And one of those risks is that Ethereum simply cannot scale well to meet the large demands of DeFi transactions. And we've seen that manifested itself in a lot of issues with Ethereum around delayed transactions, high gas fees, et cetera, et cetera. So tread carefully. But again, fascinated by what's happening in the DeFi space and will continue to be so. Okay, so we've got a ton of questions coming in. We have a winner. We're going to be running on occasion, maybe even every week. We'll see how it goes. But we have this ongoing thing we're running where we're asking people to give us some ideas on how to make the show better. And as in exchange for that, we're going to pick a winner every week based on your ideas and some randomness for a little bit of a crypto giveaway. And we do have a winner on that this week, which we will get to. And it's related to this non-fungible token or collectible idea that I talked about, and specifically one of the cryptos that we support. So we'll come back to that in a moment. But let me get to some of your questions. Again, you can post your questions on YouTube, Facebook, Twitter. We will get to all of them, I promise. Or as many as we can, I should say, because we've already got a few dozen of them here on the channel. Okay. All right. So let me see. I've got a bunch of questions. Let me start here. So Does proof of work make blockchain more secure than proof of stake? This is from Crypto Watch. And there's two follow-up questions. Do I think Bitcoin ETF will ever be approved in the US? And the third question is Abra on its way to becoming a digital bank? Wow, so some really great questions in there. Different tracks. Let me address them one at a time. Do I think proof of work makes blockchain more secure than proof of stake? Probably. I think when it comes to security, as it relates to crypto, it really comes down to a few different things, but the range of decentralization that you can have is really one of the most important things to understand, right? I would actually ask you to think about decentralization as a spectrum, meaning you can have a system which is completely decentralized, right? And you can have a system which is completely undecentralized. I would say something like BitTorrent, if you've ever used a file sharing service, or maybe the internet itself, is highly decentralized, meaning there's really no central off switch anywhere. If the UN got together and said our goal collectively is to shut down BitTorrent, I would claim it would be impossible. Okay, without every country shutting down access to the internet itself, which even that would be difficult. Okay, not even for legal reasons, but for technology reasons. Okay, so and Bitcoin, is probably a little bit. I'm going this way, so to my right on that decentralization spectrum versus BitTorrent. So BitTorrent is probably a little bit more decentralized even than Bitcoin. Why? Well, probably because some of the mining based in China is a little bit more centralized than I would like via large mining pools. I don't mind mining pools. I wish they were in more countries. I wish, I wish that the Chinese government wasn't able to go in and shut down mining pools. I don't really have a big problem with that, partially because if they were to go away, Bitcoin is so compelling, I'm convinced that others would take up the slack and arbitrage that opportunity very, very quickly. But my point is that back to the question, proof of stake is probably a little bit further to the non-decentralized, more centralized solution than proof of work. But the trade-off is scalability. Okay, let's talk about scalability versus security for a second. Okay, Bitcoin by its design, and again, I love Bitcoin. I'm all in on Bitcoin financially. Bitcoin by its design is the most inefficient transaction processing system ever created by men, right? Why does that matter? Well, that's the cost of decentralization, right? It's the fact that all of these miners and mining pools and CPUs with their hashing power have to do proof of work transactions at massive scale, right, is what makes Bitcoin secure and ultimately more decentralized. What Ethereum and other technologies have said is that sufficient decentralization is good enough for many types of applications, such as most smart contracts or DeFi, okay? And that's okay, right? So if we look at, for example, what's coming down the pipe with Ethereum 2.0 and its migration to proof of stake, inherently, proof of stake, the way they're doing it, will probably be considered less decentralized, meaning more centralized, and probably slightly less secure than Bitcoin. But that may be okay, because sufficient decentralization is relative to the problem you're trying to solve. So to be clear, if the problem you're trying to solve is we want to create the best digital gold, which is where Bitcoin is headed now, then we should make it as decentralized as possible, as secure as possible, at the expense of everything else, which is why the core development team is not so concerned about network fees, transaction throughputs, as the team at Ethereum would be, for example, where the use case is not digital gold, but to be the world's computer. To be the world's computer, you have to be able to process lots of transactions, more than Visa, for example, because Visa is not the world's computer, it's one network, right? Ethereum's goal is to be the network. Right? So they will have to ultimately sacrifice a certain amount of centralization or decentralization, excuse me, for scalability. So I hope that makes sense. There's an inherent trade-off between scalability and decentralization. And Bitcoin has made a clear claim to be the most decentralized system, and that will come at the price of scalability. Everybody accepts that. Lightning, as a second layer, is meant to address that, but that will be off-chain. It will not be on the Bitcoin chain because the core development team has said there is no way to scale Bitcoin to those kind of transaction volumes on-chain. Fine, okay? So I hope that makes sense in terms of the difference between proof of work and proof of stake as it relates to scalability, security, and the intersection of the two. Do I think a Bitcoin ETF will be approved in the United States? Excellent question. So my opinion on this has evolved over time. Yes, I think a Bitcoin ETF will ultimately be approved. I think that there are certain ETF-like products out there now, for example, Grayscale from Digital Currency Group, that aren't publicly traded on an exchange like an ETF, that are focused on accredited investors only. Once those products become even more established and proven, I can see that the SEC, the Securities and Exchange Commission, the regulatory body in the U.S., might approve an ETF for one of those companies because of their experience in reporting, in dealing with addressing price manipulation concerns around crypto, and having a track record of running a product that is effectively a security, even though it wasn't focused on retail investors. The difference between products that are out there now and an ETF is the focus on retail investors. And by retail investors, I simply mean the entire public, as opposed to a small subset of the public that is wealthy enough to be allowed to transact in these products, okay? So you'll often hear this term accredited investor. An accredited investor is somebody who's allowed by the SEC to transact in products that the average retail investor is not necessarily allowed to transact in, okay? So yes, I do think it will happen. Originally, I thought it would happen via a traditional ETF company that basically creates and markets ETFs. Now I think it's more likely to happen via a company that is already in the crypto space, that's offering products for accredited investors that will prove to the SEC that they have the experience, wherewithal, and understanding of how to do this in a way that can also be retail investor friendly. The last of those third questions, and we'll move on, is Abra on its way to becoming a digital bank? That's a hard question, partially because I don't want to give away all of our product roadmap. We tend to try not to announce product features beforehand. I do think in high level terms, we look at Abra today as a crypto bank, right? You can store crypto, you can store stable coins, you can earn interest on your deposits, you can exchange between crypto, you can send fiat currencies via stable coins and cryptocurrencies to other Abra users. So all of those features already kind of purport to Abra being some form of a crypto bank. And the question becomes, how will that evolve over the coming year? All I can say there is it is going to evolve. It's going to be super exciting. It's what drives me. I am super passionate about where this is going. I have never been more excited. I've been at the startup game and entrepreneurship and tech for 30 years, and I've never been more excited about an opportunity like I have been. And this includes the formation of the internet itself, right? So those of you who don't know, I was at Netscape in the formative years. I worked on a lot of original internet websites, .com sites, early browser distribution deals. I'm more excited about this than I was about that. And I was really excited back then when I was a kid, okay? So this is gonna be awesome. So I hope you'll all come along for the ride with us. Give us your feedback. We'd love to know what you would like to see. I have my own opinions about what I want to see and what that crypto banking service is that I want for myself. But we also want to understand what you want. And this is why I love doing this show and I love spending time on social media. Not because I get off on having arguments with everyone. I love the feedback that we get on how to evolve Abra to be that crypto bank that so many of you are interested in. Okay, Crypto Watch, thank you for that. The qualities of crypto projects that will last and outperform others. This is a hard question, but a really good question. I think that there's a couple of qualities, right? I talked about this idea of decentralization. I think decentralization is the single most important quality of Bitcoin that attracted me to it in the first place. And by decentralization as it relates to Bitcoin, originally I was talking about the double spend problem. The double spend problem says if I create a digital currency that I can copy from person to person, how do I prevent two people from spending the same copy of the Bitcoin, right, or any cryptocurrency? And Bitcoin solves that problem via its proof of work consensus mechanism. Now, and that's what actually also makes it incredibly inefficient, which is what I talked about before. But that's the price, again, of decentralization. So the question becomes, are there other blockchain projects that can address decentralization in a more scalable way, or can use the similar tenets of Bitcoin to create and solve other use cases? So those are the two things I look at first. Why does this technology solve other problems that maybe Bitcoin or Ethereum can't? Or what problems does it solve that maybe scales better using this new project, Bitcoin or Bitcoin fork or blockchain technology, whatever the case may be? So that's what I look at first. And if that catches my eye, I'll often dig in a little bit deeper. Okay, so I'm going to jump around here. We've got a lot of questions. Thank you for that. Let's see. So we've got a winner. Let me address this first. We've got a winner. I'm looking for the name here. I've got so many questions. I apologize. We will basically reach out to you on Twitter, but the question from the winner is, I believe, Find Roman on Twitter, which is William Ward is the name. Congratulations, William. We'll be contacting you, and please respond via DM so we can get you your Bitcoin. Find Roman's question, which I'll do my best to address, was, can you please cover Wax in detail, the token Wax, I assume that's, and the project Wax, which is, I believe, what you're referring to, and the growing gaming sector as it relates to cryptocurrency, skins, NFTs, etc. Okay, fantastic question. Congrats. I love this topic. It is going to be a huge thing in general, and let's talk about it a little bit. So, what is Wax? All right. So before we get to Wax, let me take a step back and explain this topic again. And I think it's going to take a little bit of time. This is something which is kind of hard at the beginning to get your arms around from a technology perspective. The basic idea is very simple. I want to create a digital collectible. The best example in the physical world for most people, if you have kids, you've probably heard, and the kids are older than 5, you've probably heard of Pokemon cards. My kids are all grown, but they collected Pokemon cards and they loved it. They have books and books of pages, and they would trade them. And there was always a fixed number of cards that they could get access to. Not necessarily very valuable because you could go out and buy more at the store, but to them, they were considered collectibles. Well, what if we had in my day, it was baseball cards, right? And baseball cards actually had huge value over time for certain cards, for certain types of players, because a certain amount of them were in circulation. Other examples of these type of things that people might have done in the past would be postage stamps. My grandfather, for example, was huge into postage stamp collecting, and also traditional art, paintings, right? A lot of wealthy people love to collect art as an alternative asset class and as a store of value, actually, for the reason that specific works of art are unreplicatable and will tend to go up in value dramatically versus the dollar over time. So that makes them, in theory, an interesting store of value. What if we could take all of those examples that I just mentioned and move them into the digital realm such that we had a simple and easy way to create, buy, sell, and trade any physical and virtual item, whether it be a digital collectible, even a concert ticket, right, or a movie ticket in digital form, such that I was guaranteed there was only one. When you say, well, how could there be only one concert ticket? Well, for a specific seat, I don't want to be able to copy that ticket, right? Even for general admission, I only want to have 200 of them, let's say. So all of these tokens are what we call, in the digital realm, non-fungible tokens. Bitcoin, for example, or other cryptocurrencies that are meant to act as currency or look like currency are meant to be fungible, such that any one Bitcoin is supposed to be equal to any other Bitcoin. But in the collectible world, these tokens are meant to be non-fungible, so that they're not equal in value to each other, and they have clear distinctions as to what makes them unique, just like you would expect with any art object or collectible. So let's get back to wax. Oh, and before we get there, the most common example of how to build these non-fungible tokens is on Ethereum, and it uses this standard. Now, if you're familiar with utility tokens on Ethereum, you've heard of this moniker of ERC20. ERC20 is a type of standard for Ethereum smart contract that refers to these utility tokens that you can more or less create at will. There is a similar moniker for an NFT or non-fungible token based on Ethereum referred to as ERC721. I don't know where the numbers come from. It's probably an ordering as to when they actually create all of these proposals. And I think ERC is Ethereum Request for Comment, which basically then gets kind of translated into a standard, okay? So ERC721 is an NFT token smart contract standard. All right, let's break that down. ERC721 is simply the name of the type of smart contract. NFT is the collectible, right, non-fungible token collectible, and smart contract is just what it sounds like. It's software that creates the token. So by and large, if you're seeing any online collectibles today, you're probably seeing a ERC 721 standard. Okay, great. So there are a few companies that are very early that are trying to develop platforms around ERC 721. Probably the best known of those companies today, is called Wax. And the WaxP token is on Abra, and it does reasonably well. And we love Malcolm and William and the team at Wax, big supporters of theirs. There are many dApps or distributed applications already out there built on Wax, and more are coming all the time. If you go to wax.io, you can see all of the developer tools and all of the other capabilities that they have to support this ecosystem. But in a nutshell, Wax is trying to be what we call a worldwide asset exchange, and what they call the safest and most convenient way to create, buy, sell, and trade physical and virtual items. Well, how can you trade a physical item using a blockchain or a crypto-based asset exchange? Well, it's actually relatively straightforward. You can create one of these ERC721 tokens that references an item in the real world. I'll give you an example. I have a friend who runs a business selling secondhand sneakers. It's sneakers or workout shoes. For those of you who don't know the term sneakers, it's a fascinating business because some of these secondhand sneakers sell for thousands of dollars. You can literally get sneakers like the ones that Marty wore in Back to the Future, right? Or original Air Jordans, for example, going back to the early 90s. It's crazy how big that business is. Now, he runs a warehouse, actually a couple of warehouses with thousands of these sneakers in them, and runs online auction sites. And a lot of people don't even want to take possession of them immediately. They're not going to wear them. They're collecting them. Some want to wear them, but it's a kind of a retro thing. But some literally want to collect them, just like art. So what they've asked him is, hey, can you continue to warehouse these sneakers? Well, that begs the question, what if the person who buys them but is warehousing them wants to resell the sneakers they've bought? Well, this is where a physical item represented inside an ERC721 token becomes really interesting, because now you can actually trade your rights to that sneaker online on an exchange without having to worry about whether the company hosting those sneakers is aware of who bought the token. The person with the token simply needs to present the token, the new token, to the warehouse, and they should be good to go. Okay, so this idea of virtual gaming items, I think, is going to explode. Collectibles, skins, the idea that you don't have to be inside of one central game to have gaming assets, that you can skin your phones, that you can have digital art. Think about the number of LED TVs that we all have and screens that we all have, where we can actually buy digital art and share it across screens in our homes. It's the future, and it's going to be really exciting. And artists are going to have a way to monetize their work by creating a fixed number of art objects, similar to the way that artists in the past have created a fixed number of prints of their key art objects in order to create inherent value in what they're doing. And so the goal of Wax is to create the digital instantiation of that, whether it's for gaming, entertainment, art, or any other type of collectible that developers might want to create with Wax in the future. Okay, so all right, long discussion on that. Sorry for that, but it was a fascinating question. Let me get to some Abra specific questions now. And by the way, we do trade Wax on Abra. So if you're interested in holding some, you can go to Abra and convert your existing crypto or stable coins into Wax. Okay, Trevor asks, are there any advantages to holding USD versus USDC versus TrueUSD versus Tether? Are they all essentially the same? Trevor, all of those coins are essentially the same insofar as how they work, okay? Which means that a bank is holding dollars, and in exchange, a certain number of these ERC20 tokens representing those physical dollars are created and released to the people who make the initial deposits, and then those people can simply use them online. Now, as it relates to Abra, we actually recommend, when possible, using TrueUSD or TUSD. Ultimately, it doesn't really matter, but you may save yourself a few extra steps given that we use TUSD as our default mechanism for storing dollars. Okay. Eureka John says, hey, just wanted to shout out that I got into crypto in 2018 with the Abra wallet, buying Dogecoin with it. True story, first ever crypto. I thought I was going to get rich from Doge. Sorry if you were disappointed there. Still love Abra. Doge, not so much. Well, I think Doge was actually partially started as almost a joke. And it's hilarious to me that it's continued. It's like the gift that keeps on giving, that it just won't die. And so I was actually in a Doge camp at Burning Man last year, funny story. And we actually had a Doge car that looked like the Doge logo. So I have a soft place in my heart for the Doge community. I'm not sure I would recommend it as a long-term investment, but it's a really interesting, fun project to pay attention to. Another question on compounding. Yes, again, reminder, we do compound interest. Any word on Abra's participation in Flare Network's December 12th airdrop of Spark tokens for XRP holders? That's from Ray. Ray, good question. I'm getting bombarded with this question online. I don't mind it. I just don't have a good answer for you right now. When it comes to airdrops and new tokens, we are somewhat beholden to the custody providers that we work with. We take the feedback that you give us and we give it to them, and we say, hey, we're getting a lot of users asking for Spark tokens. Can you please support them in your system? And they'll look at them. It's not easy. It's a lot of work to add a new token to these custody systems. So they have to pick and choose what they want to do. And this is actually another question that I have here. I actually have from two other people, which is whether I can explain how we decide which cryptos get added to Abra. And the answer is relatively straightforward. Abra tracks pretty much everything going on out there. It's impossible. There's thousands of tokens in it, and a lot of them die off, or they're not really serious projects, or they're not really decentralized. They may even be securities, and we're not allowed to list securities, or our custody partners aren't. So we have to basically go kind of step by step through this. Are the tokens live from a custody perspective with our partners, both on the trading accounts, right, over here on the trading side, and over here on the interest side? We have different custody partners. Are they liquid? Meaning if I add, let's see, if I add BAT, let's look at the BAT chart. If I add BAT to Abra, am I going to be able to trade it? Is it liquid enough to be able to trade? By the way, BAT is up 36% this year. Congrats to them. So if it's not, it doesn't make sense to add in the Abra app, because we're simply going to have a lot of ticked off users when they try to convert Tether to BAT, for example, and there's no liquidity, which means there's nobody else selling. So if the token is listed on Abra, you can rest assured that it's reasonably liquid enough for us to be able to support. If it's not listed, it usually comes down to one of three things. It's either not provided by our custody providers, it's not liquid from a trading perspective, or if the other two are true, we simply haven't gotten to it yet. And those are the ones that we do add eventually that meet the other two criterion. And we want to add as many as we can. And unfortunately, even the custody providers on the trading side, they'll offer tokens internationally that they don't offer in the US. Often it has to do with some compliance issue that they haven't been able to get their arms around yet. And they don't always tell us what that is. We could often make guesses, but we often don't know what that is. Okay, so we've got time for probably one more question. Actually, I'll take two more questions. I'll take one that's Abra specific and one kind of industry question. Am I concerned? Catherine asks a really interesting, fascinating question. Catherine asks, am I concerned that quantum computing could destroy cryptocurrency? Catherine, great question. I'm not. And the reason I'm not is that the encryption algorithms and the hashing algorithms used in cryptocurrencies can be changed. And if we felt that quantum computing was becoming mainstream, we would simply, as a community, on a consensus basis, change those algorithms. We wouldn't take that lightly. They've never been changed since Bitcoin has been in existence, to my knowledge. But for example, Litecoin uses a different hashing and encryption scheme versus Bitcoin. And that's great. Again, more technology competition. But we would likely migrate crypto to use encryption and hashing techniques that were quantum computing friendly, so that quantum computing would be embraced as opposed to becoming a threat. So that's the answer there. Yeah, lots going on at Abra. We've got some more exciting announcements. Some of you who are new users, you're able to access our new wire system in the US. We'll be bringing that to more users in the coming weeks. We're really excited about that. We've got some upgrades coming to our ACH solution and some even more exciting stuff I don't want to give away, including changes on the interest account side. But stay tuned over the next few weeks. So it's a really exciting time for us. We've been on lockdown since March, so that's 7 months now. The Abra team has continued to execute flawlessly. I'm really grateful to the team. I hope all of you are as well. Give them a shout out online. They love to hear from you. I can't express my gratitude enough for their efforts in keeping Abra going. We haven't been together for 7 months. We meet online all the time. But they've done a phenomenal job in continuing to keep the service running, bringing great features, and executing against our awesome upcoming roadmap. So I'm going to stop there. It's been a fantastic show as always. Thank you so much for the feedback. We've had people from, I think, like 20 countries. We got to get back to taking questions from specific countries next week. But thank you for your global support of Abra. Have a fantastic weekend. Stay safe. And we'll see you next week after the first presidential debate. So maybe we'll have something crypto to say about Trump versus Biden. All right? So take care, everyone. Have a great weekend. Cheers.